Good morning, everyone. Finally, markets start moving again on fundamentals. Stronger U.S. housing starts and a sharp drop in U.S. jobless claims raised the prospect that the Fed would normalize monetary policy earlier than expected. Yet just an hour later, a softer than expected Philly Fed survey reversed those thoughts. The effect on gold was stunning. Gold plunged around $16 or 0.9% in minutes. Yet when the Philly Fed index was announced, gold quickly rebounded by $23 or 1.4% to trade higher than it was before. And it's maintained the gains since. The big question facing gold is whether central banks will continue with their quantitative easing programs, which supply cheap liquidity at negative real interest rates and support the purchase of assets like gold that don't offer any income. Personally, I think the gold price has traded pretty badly recently, with investors showing much more eagerness to sell and lock in profits than any drive to buy and ride the price higher. In other words, I think fear has the upper hand in the gold market, not greed, and that's never good for an asset. For those of you who would like to buy gold, why not look at another precious metal? Silver, for example. Gold is up about 1% this year, but silver is up 5.5%. For that matter, platinum's up 10.7%. These are metals that will benefit from greater economic activity because they have industrial uses as well as investment uses. Gold is mostly used for investment and for jewelry, and as the price gets higher, people start to suffer from sticker shock. Gold is still much closer to its peak price of the last decade than the other metals. It's at 90% of its peak, while platinum's at 78%, palladium's at 66%, and silver's at 67%. So that means the other metals have a lot more room to catch up with gold. We're bearish on gold and think investors who want to invest in precious metals should look at silver and platinum instead. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.